All right, welcome traders. It is Wednesday, January 3rd, 2024. So here's the first new real video of the new year, and it is 2024. We got a great new trading plan, lots of changes to the account, lots of changes in what we're doing. We're excited, and we're off to a fantastic start for the new year. So two really great trading days in a row. So let's do our nightly review of markets and see what trades are available out there. And then we'll see if we're able to actually put some trades on. So let me go ahead and share my screen and let's just jump into it right now. So markets were up or down, sorry, $38 on the S&P today. We take a quick look here at the SPY. You can see that you had this divergence we talked about a week ago in the RSI on the weekly, and that's really played out here as MACD, RSI have just tipped over, failing at these all-time high areas here. We're pulling back. We're seeing a pullback on the weekly. We're seeing a good pullback on the daily charts. How much did we pull back? I don't know. We're right back to the 21 EMA. This might be a good spot for us to, maybe base out and get a little bit of a bounce. We have triggered a bearish PSAR signal on SPY, so we'll see what happens. Otherwise, this has really been fantastic for us. Gives us a bit of a break, really helping the 112 trades, helping strangles out as well, giving us some opportunity to maybe put some trades on here. We take a quick look at the Qs, pretty similar scenario. You had MACD divergence here, and then it's really tailing off, closing below not only the 50 on the RSI on the daily, but also breaking the 21 on the daily. So big cap techs are leading the way lower, down a little over 1% today. And then the IWM, you get small cap stocks getting beat up pretty good to the tune of 2.7% to the downside today. Again, breaking to below the 21 EMA, at least for the day, at MACD, RSI, all falling down. So a good pullback here. If we extend this line out, we did manage to break the trend line that we're on. Now it's 1 day, so 1 day break is not necessarily the worst thing in the world, but we did manage to break. Now the question is, where does this thing come to a rest? IWM had just gone too far, too fast. The pullback is totally expected, and it's pretty good. So I like where we are. I feel really good about that. S&P 500 has been telling us that you are overbought here, as the percentage of companies in the S&P 500 above their 50-day moving average have been at that 90% area, and that's really where we're hovering right now. Do we roll over from here? Do we get a bigger pullback? I don't know. We're going to see. But that's also negative. And then the put call ratio, are we going to start to turn back up? And if we look at the weekly charts on this, as this 10-day moving average starts to head back up, then you would see markets start to sell off. So if we get, and we had a good update today. So as puts start to outpace calls and that put call ratio starts to get higher, market's going to start to get a little bit more bearish in here if this trend continues. So we broke the downtrend on this, which was an uptrend on S&P. Now have we started a new uptrend on the 10-day moving average? And we remember last time this happened, really from July 26th, to August 28th, that month. What did we do in the markets? Well, we dropped from about 4,600 down to about 4,400, 4,400 or so. So a good 200-point drop in the markets back then. Not a major ordeal, but a 4 or 5% drop as these, and then it kept going after a little bit of a pullback from there until we hit, some of these areas back down in here around 4,200. So almost a 10% drop on that entire move. We'll see what happens. I don't know if we're getting a 10% drop in here, but I think it's something to keep an eye on. All right, so let's get back into the flexible grid here, and let's just keep it going. VIX today managed to climb up to 14 bucks, and that's all good. We are in a squeeze on the VIX. US dollar gaining on the session today, so moving a bit higher. on the day. MACD's been moving higher. RSI's been moving higher. So seeing the dollar here potentially have a little bit of a bounce within this downtrend. Does it continue? Don't know, but starting to see some strengthening in the U.S. dollar. And then if we look at rates here on the 10-year Treasury, rates have eked back up the last couple sessions or so, technically breaking this downtrend line, but not decisively. But we may be moving out of this area. And I think that's something for us to keep an eye on. MACD is rising, RSI rising. But have we seen the low in rates for now? I don't know. Will rates go lower? You're pricing in right now. We've dropped from a 5% 10-year all the way down to under 4% on the 10-year. So what does that mean? Well, we've already priced in a 100 basis point cut on the 10-year, and the Fed hasn't even begun to cut, and I don't know when they're going to cut. I mean, I don't think any language came out today from the Fed meetings that was, super important, but the minutes really don't show when rate cuts could possibly start. Now, they did indicate that there are rate cuts likely this year, but they really don't know where. And there was even some word from, I think, Barkin today that rate hikes are still a possibility. And I think what's going to really matter in this market is what's going to happen with rates. I mean, I think really this is the key. I think bonds hold a lot of the key to what happens this year. Everybody thinks there's going to be a price cut in March. And then everybody thinks there's going to be 6 or 7 price cuts this year. And I see all kinds of YouTubers talking about it and so forth. I don't know that that's the case. Okay. I think if you get any indication from the Fed that we're not getting that many cuts and that maybe they don't even happen in March, maybe it's April, May timeframe that we get the first cut, and maybe we don't even get 3 or 4 cuts this year. Okay. I think if we only get 3 cuts, it's a big disappointment for the market. If we don't get a cut in March, I think it's a big disappointment for the market. If you get any word from the Fed that they're not cutting soon, I think this market's primed for a pretty good sell-off, because all of this gain was predicated on, oh, the Fed's going to be cutting a bunch of times next year. The Fed hasn't said it's going to cut 5 or 6 times. The market's feeling that way. And you've already seen this 10-year drop a full 1 basis point from 5 to 4. Oops. Did it get a little too far ahead? And I think when we're looking at TLT here, it had tailed off quite a bit, a little bit of a bounce today as rates dropped, but as TLT also hit its high. Are we going to go considerably higher from here? I don't think we should. You're already seeing a lot of the price cuts, in. I think TLT may have hit the majority of its move, at least for a while. I'm not saying TLT is not going to go higher from here, but maybe it's not going to go substantially higher. I think the risk reward on getting into TLT, bonds, TMF, things like that, not really where it should be. All right, so let's take a look at where we want to be. So when we look at SPY, I like the fact that we've had some pretty good down days, and we've dropped from 477 all the way now to 468. 10 points. Okay, and that's 2% or so. This is not a big giant move so far, but 2% down move, not bad. I think that certainly gives us a better risk reward scenario than we had for the last 2 weeks in there. So any drops here to me give us a better risk reward. If we continue to drop, we'll see. But I think we have now a better risk reward scenario. I think the momentum of the train has stopped, and now it's going to be a little more difficult to get that train back up to speed. So the train hit its brakes. Hit its brakes 2 weeks ago, topped out. We talked about the RSI divergence last week. That was it. Those were the brakes. The brakes hit the market. really slowed it down. Didn't stop it, but slowed it down a bit. And again, I think to get going might take a little bit more energy and some catalysts out there. And I don't know that rates are that catalyst. In fact, I think the only thing that can happen with rates is probably bad news for the market. Okay? If the Fed cuts in March, it's already priced in my opinion. Okay, that's what this whole rally has been about, is these cuts, 5, 6, 7 cuts. Some people are saying, I think it's ridiculous. Okay, if you don't get a cut in March, I think that's really bad news for the market. If we're not going to get 50 basis points by June or July, I think that's also bad potentially for the market, because I think it's priced a lot of that stuff in. If we don't get it, I think you don't have the upside. If the Fed cuts, that's what everyone was expecting. The market's already built that in. What the market has not priced in is the Fed doing what it's been doing all along and staying its course. The Fed's not telling you when it's cutting or how much it's cutting. That's people guessing that they know. So on that, when we look at 6A here, Aussie dollar down on the session a bit today. If we look at British pound, oh sorry, Aussie dollar, yeah, was down in the session. British pound up slightly. Canadian dollar down in the session, and then the euro down on the session. So oil, let's take a look at oil here. Where are we on oil? Oil was up today, had a pretty nice up day here as we broke out of this downtrend that we were in, which was great to see. And then we came back down, we bounced on it. Do we get oil moving higher? There's been some interesting things happening over in the Red Sea, some potential attacks, things going on right there. I think, again, I'm very bullish on oil, and especially after this sell-off in oil. I think the risk reward is good. I'm heavy in oil. It's still my largest buying power position of any of the trades that I have on. More oil buying power. I have more buying power allocated to oil than I have to anything else, including 112s, ES, all of that, the S&P. So I'm really fairly bullish on oil here. I like where we are, and we're making really, really good money on oil, because I think the upside, or the fact that oil could move up, I think there's a lot more risk to the upside than potentially the oil to the downside. All it takes is one attack, one stray missile, one something over in the Middle East, to trigger oil on a move. What's keeping oil low? U.S. is making record production of oil here, and the U.S. is just jamming oil out there. It's keeping gas prices low, and it's keeping oil prices low. So the U.S. is producing a ton of oil out there. But if OPEC decides they're going to start, to cut a little bit more, they might keep things in. But really, I think there's just a risk of a war expansion makes oil to the upside something to watch. So I do like oil to the long side. Now, gold. I know this chart is really confusing looking, so let's get rid of some of these lines, and I'll move some things off for tomorrow for you guys, because I know some people want some simpler looking charts here. But gold, another pretty good sized pullback day today. In fact, it didn't stop us out. It triggered our profit targets on both of our strangles. They both hit 50% today. So we had 2 gold strangles come off winning today. So kicking off New Year with a bang, 2 winning trades, 2 big strangle trades right off the bat today, as well as a couple other trades we'll talk about. So I like gold here. I like the pullback. I like where it is. I think you can strangle gold a bit here. And I think you can strangle oil a bit here, even though the upside makes me a little nervous. But gold, some decent volatility in gold, even though it fell a bit today. We've got a 112 on gold that's up 138% in 34 days. Love it. We'll probably add some more 112 trades to gold. In fact, I may do that tomorrow, and maybe another strangle. All right, and then if we're taking a look at lean hogs, dropped on the session today. Copper, fairly flat on the day. I really like where copper's sitting here. I think this is very strangleable here. We're at 84% on a 112 in just 17 days, and we've got a strangle that's up 15% in 7 days. So we're hitting on all cylinders with all of the trades. Live cattle here starting to march back up after this pretty good sell-off. which is great for us because we've got a 112 trade in live cattle going right now, up 84% in 30 days. So we're in good shape there. And then nat gas really starting to take off to the upside. I was talking about this for a while, that we've got this ascending wedge here. We broke out of it on today pretty decisively. So can we get, we're in a squeeze. Do we see nat gas making a little bit of a run to the upside? All right, so there's some trade possibilities in there. Quick look at the sectors for today. Only a couple sectors up. Biggest sector up is energy. Energy was up 1.6%. Oil up 0.9%, and then utilities up 30. So defensive sectors here, and then energy. And on the bottom, down 6% on semis, just getting absolutely crushed the last two sessions. Retail down 3.6%. Regional banks down 3.3%. So, and then gold miners having a pretty good sell-off right back to this uptrend line where we stopped today. So do we get a little bit of a bounce in here on gold miners? I think any pullback here is going to be an opportunity for us to get long. So really nothing in the sectors that we want to care about. And then when you look at some of the big names here, Apple down on the day 7.75, Microsoft pretty much just flat on the day in a squeeze, Amazon down on the session 1%, right down to its trend line today. Meta dropping on the session 0.5%. Google up on the day, so Google having a good day today, and then Nvidia dropping a little over 1% on the session as Nvidia doesn't look too healthy in here. Breaking below the 21, breaking down to the 50, RSI falling, MACD falling on both the weekly and the daily after we failed again at 500. I think you could see some selling in Nvidia. So does Nvidia, Apple, and a couple of these stocks, do they take down the market a bit here? We'll wait and see. And then we got Tesla down 4% on the day as Tesla breaking this uptrend line here. So Tesla just a mess in here, and probably a good strangle opportunity, but I'm not going to get involved in Tesla here. So nothing that I want to watch there. And if I want to take a look quickly at our trading accounts, I got the new sheet updated for this year. We got some great new things involved in it. So as we're looking at the new year, so yesterday we finished 183 delta, which is 0.05, very flat. Theta was 105.6 yesterday for 0.31, which is not terrible in a low vol environment. We were up to 337.901, so new all-time high again yesterday. BP at 75%, and now today we've got 377 delta. So delta getting a little bit higher on the session at 0.1%, still within our 0.2% range. So I'm totally fine with delta. Theta dropping a bit today because we had four trades come off. So we lost a bunch of theta today, back to 0.25. However, a really fantastic day, up another $4,000, almost $4,000 on the day so far. So we closed out $4,570 on the session. BP dropped fractionally today with some of those. So we are up 4,570 in 2 days of trading in the new year. So we're already up 1.3%. We're almost halfway to our monthly goal in 2 days of trading. Our net licks up over $5,000 on the year so far in 2 trading days, up 1.6%. So having a great month already. All-time highs in the spreadsheet here, 341.076, which is today. So a new all-time high set today in the accounts. We are up 1.3% for the year and 1.65% on net lick for the day. And then we're starting with the clean slate. So we've seen gold strangles so far, $2,670, and then down here some spec trades came out for $1,900 today. What were these trades? Well, you had 2 gold strangles come off. They took about 40 and 48 days respectively for 50% each, and generating almost $2,600 in cash on those 2. And then I had 2 calls that expired. So these were naked calls And why do we do naked calls? Well, on our 112 trades, one of our trade rules is that we will place naked calls equal to our naked put positions on 112s, turning it into a 112 strangle. We will do that anytime the markets hit our threshold for up moves in the early part of a trade. So we were able to put those on, and then we took these back off for 77% winner and a 72% winner in 14 days each. So almost a free trade because we've already got the naked puts on. We just put the naked calls on there, turning the 112 into a strangle, and then we were able to close these out. So we technically made another $1,800, almost $1,900 today in bonus money by putting on some free call side naked puts, or naked calls, I should say, on our 112s. Again, we've accounted for that in our trade plan. If you haven't seen the trade plan and don't know what I'm talking about, okay, not only subscribe to this channel here, but come see what we're doing in the Discord. Got a lot of great new things happening there. All new trade plan, all new trade tracker spreadsheet, which is the one you're seeing right now. It's got everything in here for the dashboard. We've broken down by different different trades here, so you can see exactly how we're trading on a daily basis. You can see what we're doing here. We'll enhance the dashboard in the next couple days or so with some more charting. You can see some of our open trades, how we track those, our closed trades, how all that's working, and then how we account for this. So brand new trade tracking spreadsheet for this year with some new cool features to it to help us journal and track our trades. We're really going to focus on putting a great trade plan together. So if you don't have a trade plan and it's January 3rd, you got time, but you got to get that together. The most important thing is get a trade plan together based upon your size, your risk tolerance. So your account size, your risk tolerance, what strategies you're most comfortable with. All of those things should come into play for you when you're putting together your trade plan. You got to have a trade plan. You got to have trade rules. You got to follow those rules. Okay? That's what's going to keep you rolling ahead and keep you disciplined. And one of the things that's key here is you got to have discipline and you got to have patience. You got to be disciplined to follow your plan no matter where it takes you, and you got to have the patience to not jump in or jump out of trades. You got to let them work. Okay, so we had a fantastic year last year, well over 40% in almost every account that we have, except for the IRA, which is over 20-some%. Last year, we are off to the races this year, but I think with the new trade plan, we got some great things coming for you and some really cool features and some new contributors in the Discord. So bringing in some new contributors to add more value to our members. And we've got some small group trainings happening. We're going to have some mentorship opportunities happening inside the Discord as well. So stay tuned for all of that. Really fun stuff. We've got some people really stepping up in the Discord, helping other members too, which is what you want to see. It's a community. And if you're the smartest person in the room, okay, you're in the wrong room, number one. Number two, you can't trade alone. Okay, you should be trading with other people. You got to be trading with other people smarter than you. You got to be posting your trades. You got to hold yourself accountable, and you got to have, you got to be willing to be open to feedback from other people, because that's how you learn. We only learn when we step outside our comfort zone, and we got to be held accountable by people. And I love getting questioned. Got questioned today. Why did I trade the LT112 that I did? I had increased my size. Why did I do that? Great. I love to hear that. Why did I increase my size? I explained that to the group. Okay. We're looking at the new trade plan, some really cool tweaks and adjustments that not going to find anywhere else. Join the Discord, see what we're doing. You guys stay safe, stay healthy, and we will see you tomorrow. All right. Take care, everybody. Bye-bye.